Welcome back to Dinar Current. The financial community is buzzing with anticipation. Could we see the long-expected revaluation of the Iraqi Dinar IQD and Vietnamese Dong VND by tomorrow morning? Currency watchers, investors, and analysts are closely monitoring unfolding events, as rumors of an imminent announcement are circulating rapidly. What could this mean for you? Is this the breakthrough many have been waiting for, or simply more speculation? If a revaluation occurs, what will be the ripple effects on global markets, your investments, and future opportunities? Time is running short, and the implications are significant. In today's report, we'll explore the latest updates, expert forecasts, and what steps you should consider taking before the markets respond. This may very well be the most impactful financial development of the year. Global finance in motion. The world of digital finance is transforming quickly. The International Monetary Fund (IMF) is adapting its policies to reflect new realities, and these changes will likely influence global financial oversight. But what does this mean for Iraq? Iraq is on track to introduce a digital version of the dinar, supported by international financial frameworks. Alongside this move, a new strategic plan is being introduced to align with U.S. interests and restrict unsanctioned military aid to Palestine. In a major shift, Iraq's coordination framework forces have preliminarily agreed to bring armed groups under the control of the Popular Mobilization Forces (PMF). This includes commitments to follow Supreme Military Command directives and avoid actions that could threaten U.S. involvement in Iraq. The aim is to enhance national sovereignty amid mounting political and economic challenges. Making sense of Iraq's exchange rate plans. Recently, exchange rates have taken center stage in financial discussions. Why does this matter? Because exchange rates affect everything from the cost of groceries to how much you'll spend abroad. A leading figure in Iraq's finance sector has declared that soon, the official exchange rate will be the sole reference rate. This will also introduce a digital exchange rate. What does that mean for you? Official versus market exchange rates. An official exchange rate is one determined by a country's central bank, setting the value of its currency against others. Iraq currently operates with a fixed rate system, but moving toward a unified rate means both official and market rates would be consolidated into one consistent standard. Why is that important? A single exchange rate eliminates confusion and allows for more predictable financial planning for consumers, businesses, and investors alike. Digital currency and exchange rate evolution. A digital exchange rate would be tied to a new form of currency issued electronically by Iraq's central bank. Countries like China have already begun rolling out their own digital currencies, improving transparency and efficiency in transactions. Travel and trade benefits. For travelers, a stable exchange rate means easier budgeting without the need to track daily fluctuations. For businesses, especially those engaged in cross-border trade, a unified rate reduces uncertainty and helps streamline operations, encouraging economic growth. Potential obstacles. However, not everyone will embrace these changes. Entities that benefit from rate fluctuations may resist a standardized rate, as it removes opportunities for arbitrage. Also, there may be resistance from individuals unfamiliar or uncomfortable with digital transactions, potentially deepening financial inequality. Wider economic implications. A consistent and stable exchange rate can boost investor confidence. If Iraq handles this transition well, it may attract increased foreign investment and promote long-term growth. But if the shift is mishandled, inflation could spike, lowering the buying power of citizens and placing financial pressure on everyday life. Oil remains Iraq's primary revenue source, contributing more than 90% to the national budget. Therefore, any volatility in global oil prices could affect the dinar's value and exchange rate policy. Iraq's central bank is working toward a more market-driven approach, which could bring long-term balance but may cause short-term economic turbulence. Impact on investment climate. Investors prefer stability. A well-executed exchange rate reform could boost investor trust in Iraq. On the flip side, too much uncertainty might scare off potential capital. Inflation concerns. If consumer prices rise while the dinar remains weak, everyday expenses could become unaffordable. Businesses would feel the strain too. To mitigate this, strong financial and economic policies must be implemented to guide the transition. Preparing for what's next. Being informed is your best defense. Keeping up with financial developments enables smarter decisions. Consider diversifying your portfolio or holding assets in more stable currencies as a hedge. Closing thoughts. Iraq's proposed move toward a unified and digital exchange rate system could have widespread effects, economically and socially. While the potential for stability and modernization is real, the outcome depends on careful and effective implementation. What's your take on these proposed changes? Do you think a unified exchange rate will benefit Iraq? Share your thoughts in the comments. Don't forget to like, share, and subscribe for more updates on important financial trends. Stay informed, and we'll see you in the next video.